Hey everybody, today is April 14th, and today the Dow closed up 53 points, the S&P closed down 16 points, and the Nasdaq closed down 138 points, or nearly 1%. So what happened, and what do we have to look forward to for the remainder of the week? Before we begin, please read this disclaimer, and you can pause this video as you read it. Okay, so today a few banks reported, and the banks are always the first ones to report during earnings seasons. And the banks actually did fairly well today, right? We're near record highs on strong bank earnings. Specifically, Goldman, JP Morgan, and Wells Fargo, they all reported better than expected results. And today's leader was definitely Goldman Sachs. They reported really great, a great quarter, and they were up at 1.3%. So the question is, why did we see a bit of a fade after a strong start to the day, right? And I think this is something we've been talking about over the last week and a half, is we've seen the market sort of get ahead of itself, basically go up way before earnings, right? And I was worried this could have been perhaps a sell the news event, right? We talked about how we had a gap last week, and we also talked about how these gaps usually do fill eventually. Some gaps, they fill fairly quickly, right, after a couple of days, and some gaps may even take a month to fill, right? We also talked about how during the short term, we want to see the market in a bull market come down and retest these moving averages every once in a while, right? In a healthy uptrend, this is a daily chart. See how the market tends to come down and touch these moving averages. The silver line, the 50-day short-term moving average, it's 50-day simple moving average, which is our short-term support level. The gold line being the 100-day simple moving average, which is our midterm support level. And of course the 200-day simple moving average, which is our long-term support level. And in a healthy bull market, we want to see this come down once in a while and retest those levels, right? So that we know that we're moving up at a sustainable rate and not parabolic, right? But when we start seeing these things happen where we start to go up fairly quickly and we start making some gaps, that tends to worry me a little bit, because it seems like the market could be getting ahead of itself, being very optimistic ahead of earnings reporting, and this could be people who have bought down here, perhaps taking a little bit of profits, right? Now that earnings season is starting to kick off, we can start seeing some profit taking and a bit of a pullback, which is not necessarily a bad thing, right? I've talked about how in this market is looking very healthy. Any pullbacks could be opportunities to buy the dip, right? We also talked about how these Fibonacci levels, these channels, tend to act as support and resistance level, right? So right now we're basically trending, we're trying to break through this next Fibonacci level, right? And this is starting to act as resistance. So we can zoom in a little bit and we can see a perfect rejection off this level, right? This is not uncommon when we're trying to break through this Fibonacci level, right? These levels tend to act as resistance levels. So if we do come down and fill these gaps, that can actually be a good thing, right? And what I think is an ideal scenario, since we've come down in the past to touch the 50-day moving average, right? If the 50-day can move up during the next week or two, and we start to see the price come down, bounce off the 50-day, push up, and then finally push through the Fibonacci level and also fill these gaps, I think that would be an ideal scenario. And that would just be another move in a otherwise healthy bull market, right? And we also talked about how in a longer trend, the market is in a secular bull market starting from 2009. And we also talked about last week how we have 3 weekly green candles in a row, and this one's is definitely a gap up, right? And I also talked about how I wouldn't be surprised if we came down and filled this gap and printed a red week within this week or next week, and that's actually very healthy, right? Because look, the last time we had 3 green candles in a row was all the way back last August, right? Since then, the market will tend to go up and then take a few steps back and then go up again, right? We talked about how the market takes the escalators up and the elevators down. The market likes to grind higher slowly, right? Give and take, pull back every once in a while. So I think as earnings seasons kicks off, starting this week, and then we'll see more companies announcing their earnings, we'll start to see the price of the market, or sorry, the market start to digest those earnings and news. And there might be some volatility, but ultimately I am bullish on the market. I do think the market will continue higher. Depending on how the earnings do, we might see a bit of a pullback. But again, that might not necessarily be a bad thing, right? to see these things retest the average once in a while is actually a good thing. And we also talked about how tech has been sort of lagging, as we've seen over the last month the yields really going up, but now the yields are starting to pull back a little bit, right? The 10-year and the 30-year, they're starting to pull back and consolidate, and that's giving more fuel for the tech stocks to start a new rally, because in the past month and two, we've seen a rotation from tech stocks into value stocks, right? Due to the yields of the treasury yields rising. But now we're starting not only to see the yields starting to fade a little bit, but we're also seeing the dollar starting to come down, right? We saw the dollar go up a lot over the last month. This huge rally putting pressure on the markets, right? But now that the dollar is starting to fade, that's going to give more fuel for the markets to start pushing up higher, I think. So overall, the market is looking very bullish. I'm optimistic on the market. Any pullback is something that I would personally buy. Of course, you got to make your own decisions. This is not financial advice, it's entertainment only. Another thing to look at is the VIX. We also talked about last week how we have a gap down. Even though we filled this gap from last March, we do have a gap down, and these gaps usually do fill, right? The VIX likes to go sideways, tease the market, play with the retail traders. I would not be surprised if we just have a sudden spike in volatility, and that can put downward pressure on the markets. But again, this is not necessarily unexpected, right? We're pretty far away from, at least in the short term, from the gaps historically, right? We tend to follow certain level of ascension, but once we start to go up a little bit parabolic, this is not necessarily parabolic yet, but start to go at a higher, steeper angle, we tend to pull back a little bit, right? We talked about in, I believe, 2 or 3 videos ago how these moving averages tend to act like rubber bands, right? The farther price goes out, the more stretched out it becomes, and it tends to want to snap back towards those moving averages. And that's perfectly healthy, especially in a sustainable uptrend in a bull market, right? So I guess that's it for today. I'll definitely update you again on Friday and next week. Then we'll see more earnings come out. And I do think that with more of those tech stocks, those growth stocks releasing earnings in the upcoming few weeks, we're going to start to see the NASDAQ start to lead again, right? Because right now the Dow is leading, and the Dow is up today because all the bank stocks did very well today, especially Goldman Sachs. You know, Goldman Sachs is part of the Dow, and the Goldman Sachs did very well today. And so that's why the Dow is up today. But I think as we start to see more tech stocks, their earnings come out next week, and I think it's going to be a lot. It's going to be good, and that should help pull the markets up. But again, anything can happen, right? I don't have a crystal ball. I don't have inside information or anything like that. So if the earnings aren't good, then that definitely will put downward pressure on the markets. But we'll take it day by day, and I'll update you as more earnings come out, and we'll see how the price reacts to that. Thank you for watching this video. If you found it useful, informative, helpful, please like this video, leave a comment below, and of course subscribe for updates. Thank you also again for your support, and thanks for watching. Have a great day.